Hello and welcome. My name is Ed Newton with Newton Wealth Management. We put these podcasts together to help you as you continue along the path to achieve and maintain a worry-free retirement. We hope you'll enjoy this one and find it beneficial. Every 4 years, we take a look at how presidential and congressional elections may impact your personal finances, taxes, investments, healthcare, retirement, and more. Our analysis is intended to be nonpartisan and focused on helping you plan for potential scenarios and outcomes. After a long and contentious 2020 election, it appears that Joe Biden has hit the 270 electoral vote count needed to win the presidency. But with the Senate still undecided and numerous recounts, runoffs, and legal challenges underway, it's not over yet. Deciding the outcome of the election may take weeks or months, considering the Georgia runoffs are not until January the 5th. Who wins there will determine which party controls the Senate, which will have a significant impact on the president's, whoever the eventual winner is, ability to achieve his legislative agenda. What should you do in the face of this uncertainty? Let's look at what I hope are some helpful insights to consider. Longer term, the economy drives the markets. While the uncertainty over election results can unsettle markets in the short term, the pace of the economic recovery and the course of the coronavirus pandemic are likely to be more important to stock market returns than who controls the White House and Congress. We believe we are in the early stages of recovery from recession, and fiscal and monetary stimulus would help keep that going. Big government spending and low interest rates are likely to continue. Such a fiscal and monetary policy cocktail may well be the most important driver for the economy and in turn asset prices for 2021 and beyond. In this environment, stocks have outperformed bonds and growth stocks have outpaced value stocks. On the borrowing front, you might want to consider refinancing your home if you can capture lower rates. If you're saving for the long term, there are higher yielding options than money market funds to consider as well. Tax hikes have not historically tanked stocks. In fact, in the 13 previous instances of tax increases since 1950, the S&P 500 has shown higher average returns and higher odds of an advance. That's likely because tax hikes often coincide with periods of rising government spending, which tends to stimulate the economy. There are steps you can consider to help mitigate the risk of rising taxes on your bottom line. Federal tax policy could change a lot, or a little, or not at all. So it's important not to let potential policy changes cause you to make investment decisions that might not be good for you in the long term. But if you are concerned about rising tax rates, there are a few steps to consider taking this year, which may be good moves regardless of who wins, but even better if taxes rise next year. Among those you might want to discuss with us are converting a traditional 401k or IRA to a Roth. You'll pay taxes this year on the conversion, but growth and withdrawals in retirement are free of federal taxes, and there are no required minimum distributions. This can be a particularly interesting strategy for those over 72 who decide not to take an RMD this year, a one-time benefit of the CARES Act. Bunch several years' worth of charitable contributions into this year. Doing so can help you make the most of your charitable giving. Consider accelerating some capital gains. If capital gains rates do go up next year, realizing some gains this year could save you taxes. Exercise stock options. If rates rise, it might be worth considering exercise stock options before year end. You should revisit your estate plan. The 2017 estate tax cuts are scheduled to expire December 31, 2025, but those could be increased earlier if Democrats win the Senate. On the investment front, potential changes in regulation could lead to opportunities for active investors. A Biden administration would likely reverse Trump-era policies and tighten regulations on such industries as fossil fuels, healthcare, defense, domestic banks, and financial service companies. For example, Biden might take executive action to rejoin the Paris Agreement on climate change, ban oil and gas permits on public lands, and to strengthen the Affordable Care Act. Industries that could benefit from a Democratic administration could include utilities, renewable energy, managed care providers, and infrastructure builders. Don't let your emotions cloud your decision-making. It's easy to let emotions about elections cloud your financial decision-making, but acting when you're fearful or anxious can lead to results that can undermine your long-term investing success. Some antidotes include making sure you have an emergency fund so you can weather short-term market drops or unexpected financial needs. Test driving your investment plan under various scenarios can also help put the current uncertainties into perspective. If you feel you can't stomach as much risk as you thought, there are more conservative investment mixes that can help you reach your goals rather than going to cash and missing out on growth potential. To me, here's the bottom line. While elections matter, they have less of an impact on the markets and investments than other factors, like the pace of economic recovery, which is now in the early part of the cycle when markets have tended to climb a wall of worry. Successful investors tune out the noise that can unsettle markets in the short term and invest for the long term. To a large degree, the way you invest and plan for your goals are more important in the long run than the party controlling the White House or Congress. So what should you do? Make a plan, stick with it, and rebalance investments when you need to. If you need help, please feel free to contact us. We hope this information has been useful to you. Our goal at Newton Wealth Management is to help clients achieve and maintain a worry-free retirement. We are a fee-only firm. That means we don't receive commissions or any other compensation from the investments that we utilize. We have a fiduciary responsibility to our clients, which means that we always put your interests first. If you haven't set a plan or not sure that your plan is appropriate for your goals, we would be happy to talk with you and see if there's anything we can do in order to get you on track so that you too can achieve and maintain a worry-free retirement. If you have $250,000 or more of investable assets, I would invite you to visit our website at www.NewtonWealthManagement.com. There you can find out more about our firm and the services we offer. Again, the website is www.NewtonWealthManagement.com. From the website, you can also contact us to request a no-obligation, no-fee consultation. We look forward to hearing from you at www.NewtonWealthManagement.com. Newton Wealth Management is responsible for the content of this podcast and reflects the current opinion of the speakers. It is based upon sources and data believed to be accurate and reliable. Opinions and forward-looking statements expressed are subject to change without notice. Securities offered through Archer Investment Corporation. This information does not constitute a solicitation or an offer to buy or sell any security. A risk of loss is involved with investments in stock markets. The commentary provided should not be regarded as personal investment advice. Past performance is no guarantee of future results. You should carefully consider investment actions in light of your goals, objectives, cash flow needs, and time horizon.